Good afternoon, traders. Thank you for joining us at parttimetrader.net. We're going to go over how to use the alerts, and let's start right off with the members spreadsheet that's going to be shared with you. So when you go into your Google Drive, you're going to click on Shared with Me. When you click on Shared with Me, you'll see a file called Member Stock Alerts 2025. Once you go into that spreadsheet, you'll see a README checklist, markets, and the watch list. So we're going to go over today what each of these tabs mean. So the README file talks about how we trade these stocks. So I'm not going to read this line by line, but just so in summary, we're looking for stocks that have good potential, and we're looking to enter when the market is moving up. Next, you go to the next tab here and you're like, how do I use the spreadsheet? Well, step one, you want to know if the market's suggesting it's a buy or not. So I'll give you an example of this and we'll go over that right here. From March 4th, 5th, 6th, and 7th, you're going to see that the market um, did not say we should be buying. So you see here, is this short-term bullish? No, no, no. So we're not buying between those periods. So March 4th, 5th, 6th, 7th, kept getting a no, 7th, no, 10th, no, 13th, we're getting close. We're under 1%. We were getting close here at the 7th as well, but we didn't get a buy trigger till the 14th. Now, why is this important? Well, I'm going to show you with a live example here why it's important to wait for that market to be a yes signal. Let's go to the alerts and let's think about on March 14th onwards, if we were to buy the alerts that came before that, how would we have done? So what I'm going to do is go in here and I'm sharing with you all the alerts that showed up from March, before March 14th. So in the alert spreadsheet, when you would have gone into the March list, you would have seen before March 14th, right? You've got a bunch of yeses here. And if you were to take those trades, how would you have done? So I'll bring that chart over here. So we're going to go over each one of those trades. And as you can see, CRVO, I've got a buy above 695. So if I go back to the spreadsheet and check that, we've got CRVO and the buy here is about 705, right? You want to buy above 705. As you can see, this was added on March 13th. So if I go back to the spreadsheet again, we look at CRVO on March 13th, it was added to buy above 705. So it's buying above this price. And it, on March 14th, we didn't get above that because once the market turned on March 14th, this was a buy above 705. So if you got in there and you bought it and you put your stop loss below the low of the day, you would have been safe. The next day you could have sold half and then you wouldn't have gotten jiggled out here. And as you can see, this one ran up to about $14. It's almost a double. So let's go to the next alert. So the next alert was, I guess on March 14th itself was RGC. We've got KRYS. You see all these alerts are here. The trigger prices are here as well. What price should I be buying them at right here? And I'm going to go over those quickly with you on this watch list chart layout. So on March 4th, 7th, 14, ADMA came in, and that price you want to buy is above that high. So 1872. So once it gets over that 1872, as you can see, it just ran up. And then you would have sold half the next day, and you would have stayed in this trade and just waited along, turn it into a swing trade. ALHC, same thing, March 14th. The high was here, 1620. Didn't hit that till 18th, and then we ran up, right? But notice how all the chop here from March 5th to 6th, the stock's doing nothing because the market's not doing anything, right? Again, this is another alert here, RGC above 15, let's say above 1550. It ran up. Now, this is just once in a while occurrence. You won't get a lot of alerts that do this kind of move where they go from 15 to $60. This is just not normal. So you would have got in, maybe stopped out and made some good profit there. KRYS, here's an example of another one. March 14th highs 180, ran up to 195, and then started pulling back. So you may have broken even on this one. MP, this one didn't work out that great because it was a March 6th alert, but notice the March 6th alert was 25.70. If you got in there on March 14th, when the market turned around, look, you're up $2. And it did kind of die out. So not all alerts will give you 100% return or 100% success. There's going to be some that don't work out. So I'm just sharing examples of ones that didn't work out, like XNet, another one that didn't work out. It did work out in a way because you got in here at 450, ran all the way up to 550. You made $1, you sold half, and if you put your break-even stop loss at the price you bought it, $1 below, you wouldn't have lost money on it. You broke even. TGTX, this one worked out. March, let's see what the March 6th high. This was the March 6th high. It didn't get through that till around over here, I guess right here. You may have gotten stopped out of that, but then again, if you got in at March 14th, it ran up. So that's in summary how you should be trading the alerts. I want to just pull up the markets for you just to kind of show you why it's important that we look at the spreadsheet where it talks about what was the market doing on those days. So let's look at March 13th onwards. So as you can see here, we kept getting these no's, 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 no's because the market's on a downtrend. On the spreadsheet, I just showed it to you, and we didn't get that yes till here. And as you can see here, let me just hide this, a lot of data here. As you can see here, from March 14th onwards, right, when we got that yes trigger, 1 day, 2 days, kind of down, 3, 4. So you had 4 days, things were up, and then they started falling apart. And you had this blip and then so forth. So this would have been our sell signal on the 21st. So once we ran up 1, 2, 3, boom, and then the sell signal came in here because we broke below this low. So on March 21st, you would have been selling all your stock. So let's go back to our alerts and let's think if we bought this one here, sold it here, made money. This one here, bought it here, sold it here, made money. This one here, bought it March 14th high, sold it on the 21st. Where's 21st? Way over here. You're out, you made money. This one here, bought it here, 21st. Where are you? Right here. You're out, you made money. So again, let's summarize, go back to the spreadsheet. We first look at what is the market telling us? And that's, you got to go to the spreadsheet, you got to look at the markets tabs. When you go to the markets tab, you got to ask yourself, is this a buy on March 4th? No. Is this a buy on March 5th? No. So we got all these no's, 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 and we don't get yeses till the 14th. And then you'll notice um, we started getting no's on March 18th, so things started slowing down and so forth. So there's also another no on the 21st and 22nd. So by this time, you start taking profits and starting to sell your stocks that you brought in. So I want to thank you for joining us at parttimetrader.net. I hope that was helpful. I would encourage you to watch this video again slowly so you understand how to use the spreadsheet. And I hope this example was helpful. Thank you.